Good morning, everybody. Let me pull up this real quick. Good morning, Tony. Yeah, let's start digging into some stuff. Tony, you were here last week, so I hope you kind of remember what the process is like, because that's like, again, that's one of the main things is showcasing the process, right? Oh, nice. Nice. Yeah, did you see how the analysis we did last week was pretty much exactly what happened? Like the analysis before last week began, last Sunday, going into this previous week, and how it pretty much did exactly what we wanted it to do, right? I told you guys to anticipate a possible reversal, and it was just absolutely exactly what we wanted to see, you know? Yeah, beautiful. That's the right mindset, bro. The process is much more important than the money because the money doesn't come unless you have a good process, right? Just like a business, because this is a business at the end of the day. You know, if the business doesn't have a good plan, good processes, good ways of doing things to get a consistent outcome, then obviously whatever results take place are random. And again, we don't do random things here, right? Um, so, everything has a purpose, you know. So as always, the first step is obviously starting at the economic calendar. When you look at the economic calendar as well, you want to make sure that you're thinking of power of three, because the weekly range operates in a specific type of way, right? Power of three is on the monthly, on the weekly, on the daily, all the way down to even like the 1 hour and 5 minute charts, like the candles, right? Obviously, there's different perspectives, different ways to navigate that concept on different time frames, and all the lower time frames work within that higher time frame power three, right? So obviously, understanding the higher time frame power three, depending on what your overall like view is, like what's your goal, right? Are you trying to figure out what higher time frame bias is and learn how to navigate that? Or are you trying to understand how to navigate power three on the lower time frames, right, for intraday, more near-term liquidity, right? So both of those elements have their place in your analysis. And again, just like I mentioned in the last couple of live sessions, you got to be able to piece a lot of things together, and that's why it takes so long. You know, this isn't something that you master overnight. It's not something that, oh, I learned this concept, so everything's going to change. It's the application of particular concepts together eventually is what will get you to whatever you're trying to reach for, right? And then you got to add in risk management, right? What's your process to that? How do you mitigate losses? How do you behave and think through losses? How do you behave and think through wins, right? All of that stuff requires a learning curve. How are you going to feel when you size up, right? Because that's a learning curve as well. If you're used to 10, 20, 30, $40 trades, and then all of a sudden you're trying to get $500 a day, your relationship to money may throw you off. So again, that's, there's a process with all those things. And, specifically those types of things, managing accounts and like the intricacies with risk management, a lot of that is heavily discussed in my private community. And of course, it kind of depends on what each student requires. But again, one of the biggest, most important things in trading is obviously gaining clarity. And again, that's what these calls are for. It's also what many of the videos here on this YouTube channel are for as well. I'll probably do some risk management conversations later on. I do have a risk management video that if you guys haven't watched, you definitely should. And then, of course, I also got to shout this out with ICT, right? He has a risk management video, I think a couple of videos, that breaks down a lot of the processes that he actually talks about in great detail in his private mentorship charter content, which he did from time to time. But regardless, like my video for risk and his video laying out different ways of looking at risk, they're very much worth the time you'll invest in watching those. Because again, like I mentioned a second ago, there's different elements to becoming a good trader. It's not just finding entries. It's not just learning how to aim for targets, right? It's not just about the overall analysis. It's how you mesh all that stuff together. And obviously there's many different components. And then obviously you got to navigate other time frames, other assets together, some that correlate, some that don't correlate, right? So, it just takes time. So it's very important for y'all to be very patient with yourself. And, you showing up to watch videos like this and content like this with someone that's constantly proving the process is very much beneficial. It's not always about, where do I enter? Give me a signal, right? Signals never made anybody rich. Although it may feel good to see it play out off of you copying someone else's opinion, at the end of the day, you want to think long term. Is that going to benefit you long term, or is that just instant gratification to make you have a false sense of confidence, right? And that, again, that false sense of confidence could eventually lead to issues. As long as you have the right mindset, if you're following someone that's giving signals or whatever, and you're trying to actually understand the process, then signals can be beneficial in some capacity, especially if you trade a similar model as that person. Otherwise, you're literally just like gambling. If you're just taking someone else's opinion, you have no idea what their risk models are. You have no idea how they like to take profit. You have no idea how they even do their analysis to determine why that opportunity was a good idea in the first place. You're just wasting energy. And that's something we can't get back. So you want to squeeze as much value out of the time that you spend in the markets and be very intentional as much as possible, right? But yeah, so with some of that stuff out of the way, we are going into a time of the year seasonally where obviously there's something called a Christmas rally. So a lot of times towards the end of the year, there is a lot of strong bullishness because commerce is constantly perpetuating. People are buying things, doing a lot of different things related to spending money. So obviously that stimulates the economy, stimulates companies, increases profits and different stuff like that. But then again, towards the end of the year also, you got to think of power 3, because in the yearly range, there's a yearly candle, right? So power 3 extends all the way to times even like yearly time frames, right? ICT's talked about this on Twitter, or X now. I think he talked about it like 4.5-5 years ago. His tweet where he talked about that obviously is watered down at this point, but it's very important to never let go of power 3. Becoming a master of the basics is going to benefit you tremendously versus trying to figure out all these different concepts and master all of the different models. Being a master of the basics is really all you need. Like ICT says all the time, 5 to 10 points can change your life. One mini contract, 5 points for S&P is $250. You do that 3 times a week, you now have replaced your job in many people's scenario, right? In many cases. So, you want to think about things in that way as well. And then maybe you'll grow into something larger, but you'll cross that bridge when you get there. You know what I mean? But yeah, so like I said, we're going into the end of the year. Things can pump a lot of times and go higher. But then again, there's also a lot of holidays. And for those of you that have been hopping on these calls, or those of you that are in my private community, you know that the rule around holiday times, the day before a holiday, the day of, and the day after, are classified as low probability conditions, high resistance, low volume conditions. So you either take that information, study it, and then decide eventually what you're going to do, whether you're going to trade normal or not, or you do what I recommend, which is proven over the last couple of years to be effective, and lower your risk, lower your amount of trades, like one trade max, right? If you take 2 losses, you stop for the week if there's a holiday on that week. Or like I said, you just don't trade at all and just study how it operates. Because we look for the best, most choice setups and conditions that we possibly can. This isn't like a normal job where you have to show up 5 days a week and engage every time you sit at the chart. Because that's the mindset of a worker at a job. Like you're going to show up and you expect to make money. Trading is not like that. That's why it's so difficult for so many people to stick with it, because that's their expectation. And then you got all the hype on social media and seeing all these people lie to you, claiming that they're doing this and that when they're really not. And they can't get on the chart and prove anything. They just talk. And then your expectations get all watered down. So, but yeah, so around specific times like holidays, which are coming up, and the fact that it's the end of the year, considering Power 3, you want to consider the fact that, it's going to be a time where you should slow down potentially. It's a very good time to chill. You don't want to ruin your holidays because you had to push, there will be better times. Not that right now is going to be a bad time, but once we start seeing signs that things are going to get less clean, keep that in your mind. You know what I mean? It's going to potentially be a little more difficult, right? Eventually. Right now, it seems like it's pretty nice. We'll get into that in a couple minutes. But yeah, just some things for you guys to consider. A little housekeeping, if you will. But yeah, we have a G20 meeting on Monday. Sundays we never trade, period. Because why do that? We like to operate within Power 3. And if that's the case, we know that Sunday, Monday creates generally consolidation and manipulation going into Tuesday. Then Tuesday, Wednesday has a 70% chance of creating a higher low of the week. You can also look at the potential of that by observing this economic calendar and then using the chart that you see on TradingView in conjunction with that as we approach those days with that stuff in mind. If there's like red folders on Tuesday, Wednesdays, a lot of times that's going to be the expansion move. It's going to set a low or a high depending on the bias. And basically those are the best days. Tuesday, Wednesday, and Thursday are the best days. Then after you pass Tuesday and Wednesday with 70% chance of expansion and the higher low of the week, Thursday and Friday, depending on if we hit a higher time frame PD array, and depending on if we're one-sided, if we hit an opposing higher time frame PD array going into these days, generally that'll instigate, especially if we take a higher time frame liquidity pool at the same time, it'll instigate a potential reversal profile. It's just something for y'all to keep pressing forward with and study as you move along, because it's a very common thing that takes place. It's a good piece of information to have in your toolkit, so that when Thursday, Friday comes and you notice these signatures and price take place, you're able to identify the Power 3. You're then able to potentially frame counter trend ideas, and get in line with reversal profiles. Maybe you missed an opportunity at the beginning of the week, and then, maybe something makes sense within the context of a reversal, off of a higher time frame PD array that gets hit opposed to the bias that was in play that week. Right? So just some more little foundational things to consider. And then obviously we could see the end of this week we have some red folders that may be impactful. So definitely keep that stuff in mind. PMI, this might be decent volatility. Unemployment claims are one of my favorite things to watch. It's not that it's like insanely volatile, but a lot of times things can be clean from what I've experienced with unemployment claims. Again, we are moving towards the end of the month. So again, go back to Power 3. There's a daily, a weekly, and a monthly Power 3 that we like paying attention to. So because it's the end of the month, price has been bullish in the indices, we may see the rest of the month look to decline. We've also been anticipating potential downside move because of the election excitement that has people being extremely greedy, thinking it's just going to go higher, higher, higher You know, but that's just not how it works. You know what I mean? It's just not the case. You know, it goes up, then it goes down. It goes down, then it goes up, right? And if we're so extended in one direction, it just makes sense that price will want to turn around, go start, you know, taking some people's stops, because, you know, when things are overly extended, a lot of times there is profit taking from the larger fund traders, you know, the professionals that are out here trying to victimize you and me, to be honest, right? But yeah, so that's kind of the lay of the land for, or in relation to the news, right? So obviously the next step, as you guys know, we go to the bonds and yields. So looking at the yields, just to reiterate, the bonds, which are these markets, a lot of times dictate or have a heavy influence on what the currencies, foreign currencies and the indices will do. And then obviously the yields a lot of times influence heavily the DXY, right? So if you can mix these two things in conjunction with each other, you can have pretty strong back-end knowledge and confirmation in terms of what the market has a high probability of doing directionally, if you're looking at the indices or the DXY, right? So as we can see on this monthly chart, we got the yields rallying, prices coming to, or it's fulfilled a premium. Some things to observe here. We got this fair value gap here. I'll probably use this one actually. Here, let me pull this up. So yeah, we'll keep in mind the fact that we have this fair value gap here. Now, if price wants to get above that fair value gap and we stay above it, obviously we have a pretty obvious target being this high. We've already taken out these highs. These are clearly monthly highs because we're on the monthly chart. So price has taken that. If we could stay above this fair value gap, I'll continue to believe that this will go higher. We drop down to, is it the weekly time frame? Yeah, this weekly time frame here, we got a fair value gap right above this monthly high here. Okay, so we will just mark that off real fast, and then we'll go back to the monthly, finish up some stuff on this time frame. So long term, if it is going to go higher, it needs to stay above this monthly fair value gap, right? Once it breaks down below that, we may have some more work to do seeking more of this candles range, but we'll see, right? If you identify the current range that we're in, we took out this sell side here, okay? Then we came up and now took out this fractal high here. So now this becomes a range that we may be able to navigate if it is going to go higher. I'd prefer it to stay above this, obviously, this fair value gap. But then you can also argue that we're in a large consolidation on this monthly time frame. It's not really too decisive. Long term, it seems like it's going to hold, and that's totally reasonable given the fact that we're at the end of the year on top of everything else. But yeah, we've taken stops here. We have buy side available here. We have this weekly fair value gap here. I'm going to assume, given what we're seeing, that we're going to stay above this monthly fair value gap. If this continues to go higher, then this is our first confirmation potentially for a larger reversal on the indices, kind of giving life to that drop that we just saw off the heels of the election excitement that punched price higher to new all-time highs across the board for the indices. And then when we take a look at the DXY, you'll start to see more of the story as well. And maybe we'll have some layering effect to continue to trust that price may want to sell off. And then our targets could potentially be to the downside for the indices. But yeah, I'm assuming, like I mentioned, that this is going to go potentially higher still. As long as we could stay above this level here, we have relative equal highs up here as well. That's a current monthly high, but now we got relative equal highs. If you scrub over to this side, you could see this large wick here, right? If we measure out this wick, we could then start to see a little bit more targets to the upside. Okay, so now we have the midpoint here. Okay, this wick midpoint may be a target if price is going to go higher. Obviously, if we are going to go higher, I want to see us get up here at some point, right? Whether that happens this month, next month, or in January, who knows? We'll see what takes place, and if we could stay above this monthly fair value gap. Let me erase that real quick. But yeah, so this is a target before we get up here, before we end up attacking the highs up here. So if we are going to go higher, maybe we open up to start the week, give a little drop. I wouldn't honestly be entirely surprised if they try to attempt to get down below these equal lows. What's below here? There's stops. If you're a buyer and you're trying to load up in a reasonable discounted position or more discounted position in your smart money, stops are right here, right? So them running down, purging those stops, running higher, I mean, that's totally logical and would not upset the fact that this is, in my opinion, going to go higher. If we want to change our narrative on the higher time frame, you have to see 3 PD arrays break opposed to what price is currently doing. So price has taken out sell side here, broke above this high, shifting market structure. If you think about the 2022 model, we could see that occurring potentially on this weekly time frame, you know, acting as a potential confirmation that we may continue to go higher, given, you know, these other aspects as well, like this monthly fair value gap being respected, so on and so forth. So staying above this monthly fair value gap, not breaking through this. Actually, this will probably be my line in the sand for bullishness, to be so honest. I wouldn't want to see it break through this. This would be my line in the sand right here. And if we broke through that, then obviously I would then turn my attention to potentially here, here, possibly this fair value gap in here as well. But obviously if everything stays the way that it is, again, we have our target up here. I'm going to assume that that's what it's going to reach for. So that's what we're going to go into this week, assuming that price is going to want to find reasons to go higher. We have volume imbalance here, volume imbalance here. So yeah, I'd like to see us stay above that. We have a fair value gap in here as well that may act as a support level. So yeah, just some things to keep in mind to justify us continuing to see this go higher. And again, we have a high here and we have this midpoint of this wick. So those are the most obvious targets that I'd like to see if we are going to continue to push higher for this market. And if that all stays intact, then obviously the DXY should follow suit and go higher as well as a result, because this influences the DXY. Interest rates drive a lot of things that happen in economies, right? Especially when it comes to specific currencies. Okay. So yeah, that is my opinion on this market. Then if we just take a quick glance at all three of them, try to observe if there's any type of SMT, because that could also be kind of significant. So we do see an SMT here, right? If you look at the highs here. So we want to keep that in mind as well. So if price ends up turning around here and starts attacking the low down here, right, that may be something that pushes the DXY lower, at least in the short term. And we kind of pause our interest in going higher until something gets back in line or reacts positively to the upside, continuing to promote the run higher. All right, so this SMT here is something that we want to keep in our sight. So then when we're monitoring different price delivery as the weeks pass or as this next week passes, we have that on the back end to allow for flexibility if something is incorrect, because you're not going to be perfect. Nobody is. But as you can see, we're favoring one side going into this week. That one side is going to be price going higher in this market. And if something breaks that, for example, breaking down below these lows, closing strongly, smashing through this fair value gap that should act as a support level over here, smashing through this lower portion of this fair value gap, then again, that changes our overall sentiment unless something changes back to the upside. Like maybe it slices through and then gets right back above this. Obviously, that's longer forecasting, but it's just some things to keep in mind when you're looking at these higher time frames, so you can have a deeper feel for what could potentially take place, and it just gives you more information to be able to trust a particular narrative, right? In different areas that trigger specific ways of thinking, right? Or adjustments that maybe need to take place, or just amplifies trust, right? So I hope that stuff makes sense. Again, if you guys have any questions along the way as we march through this, because the next couple assets are probably going to go pretty quick, definitely let me know in the comments, and I will pause and address whatever issues you guys come across, right? But yeah, I hope all this stuff makes sense. So we're going to assume that this is going to continue to go higher based on the things we just discussed. And now we'll move on to the other assets, right? So if the other asset is going to go higher, and these two classes of assets are reverse correlated, that should promote this asset class to go lower. Remember, the yields dictate where the DXY will go. So if this is going to go higher, I'm assuming the DXY will favor that as well and go higher, continue to go higher. And if that stays intact and that plays out in that way, we should then see this go lower, which would result in heaviness in the indices. So you can start to see this layering effect that takes place when you're able to navigate these markets together, right? It's not always just about one asset, although that's the way that most people want to think because they want everything to be easy. This isn't like that. There's many things that influence specific things, and in order for you to trust something wholeheartedly, to trust that your financial stability is going to be able to be placed in this market so you can pay your bills, take care of your family, and live your life how you want to, it's going to require advanced knowledge. It's not going to be catching signals from somebody. It's not going to be, just one and done, right? One model is great, but, you got to have other little skill sets, right? And specifically on that topic, there's 11 skill sets or different categories of skill sets that, in my opinion, are required for someone to be able to say that they're proficient in trading. And there's processes and sub-processes to those different categories of skill sets. That's from bias identification and validation. That's risk management, mental management, higher time frame analysis, fundamental analysis, managing losses, mitigating losses, a whole bunch of different skill sets that are required, and sub skill sets below those different skill sets. It kind of proves to yourself too, when you have things organized and understood in that way, that you know what the hell you're talking about. So a lot of those things are discussed as I do these calls. So definitely take notes and make sure you're very vocal with your questions, because you don't want to miss anything. So yeah. So with the yields looking like they want to go higher, now we switch over to the bonds. If that's going to take place in the yields and the DXY is going to go higher, this should go lower and cause heaviness, like I mentioned, in the indices. So what can we see in this market here that can, potentially assist us in trusting that that's going to take place, or that this is going to end up going lower in a trustworthy fashion? And what will invalidate that analysis, similarly to what we discussed in the other asset, right? So we could see there's a volume imbalance here, right? If we look at this monthly time frame, I would prefer to see us stay below that. Notice how we wicked below it, and now we've come right back above it, or right into it. I would like to see us potentially going into the next week. I mean, it's okay for it to rally back above it. Volume imbalances are the most flexible PD array in ICT's arsenal. It could go back and forth, and then eventually use it one more time and then go in the intended direction. It doesn't have to act as, like, say, an order block that shouldn't break through the midpoint if it's going to go higher, right? If it breaks through the midpoint of an order block that you're looking for, like in this example, right? If this was a bullish order block, if it breaks through the midpoint of that, to me, that's invalid. If it closes below it, it's invalid. And that's across time frames. If you're looking at a 1 minute, or you're looking at a yearly time frame, or a monthly or weekly, whatever, that is the cutoff point to trust that particular order block, right? And obviously that's not my personal opinion. That is how ICT teaches it. in terms of validating a particular order block. And of course, the highest quality one couples a fair value gap, either in close proximity or in alignment with that order block. All right, just some order block information for those of you that care to trade those. But yeah, in terms of what's in front of us right here that'll allow us to trust this to go lower, and then obviously that translates to lower indices. We have this volume imbalance. I mean, you can make an argument that this wick, if it can close below that wick may act as a resistance, a dynamic resistance if it pulls into it. We wouldn't want to see it break past the 50% of that, right? Because generally, as price is printing, order flow should be showing with those levels being respected, right? If there's a large wick, it should return back into it and not break past the midpoint. That's true for up wicks as well. If price is going lower, if it was to retrace into like an up wick, like as you can see here, it should respect the midpoint of that if order flow is going to continue in that direction. So that little nugget right there is very, very valuable, especially on the lower time frames when trying to identify order flow and whether you can continue to trust it pushing in a particular direction, aside from watching how the other PD arrays along the way are being either respected or disrespected. Okay, so again, we are in a similar situation, just in the reverse to the yields. It's in a large consolidation. If you take the extreme here to the low down here, let me fix that. We're basically at equilibrium, right? We're in the middle of this large sloppy range. So we'll kind of see what happens, right? It's very reasonable for them to be in this type of position towards the end of the year, because again, power 3, right? If you think of power 3 and you understand power 3, it should make sense why the end of the year may be a little bit more difficult, right? Or be stuck inside of a range and not really choose to do things from time to time, right? Or, maybe it becomes a little more difficult. But that's something you have to accept. You can't fight that. Otherwise, you're going to fight your way into drawdown. And if you had a good year, the last thing you want to do is blow it all because you had no control and just you had to trade because you showed up to the chart. It's one thing that plagues a lot of people. So if that is something you deal with on any scale, you want to make sure that you combat that and put rules in place that'll stop you from doing that. Otherwise, you'll just continue to do the same thing over and over and not get the results you want and just make this harder than it needs to be, when you could just be patient and wait for the proper things to line up based on some of the things that we're discussing here, right? Some of the things that we talk about process-wise on a weekly basis. If all that stuff is considered and in alignment, then things become a lot less stressful, you should say, right? But yeah, so again, we have this volume imbalance. You can make the argument that we should also potentially stay below this as well. That should act as an inversion fair value gap. We cut through candles, like ICT says. Doesn't matter if there's a lot of price delivery. If we want to see this continue to go lower, like in the reverse of what we just looked at on the yields, then obviously we have, from this time frame at least, this volume imbalance on this monthly chart. We have this monthly fair value gap that could act as a inversion level, right? I prefer to see it act as an inversion level. That's just another confirmation to potentially trust the downside delivery. So if we take that information and then we drop down to the weekly chart, you see some of the weekly levels that I have already marked off. Just move this back a little bit. Let me get a more accurate view. All right, like I was just discussing about the wicks, right? Price, you could see price hit that wick and it's kind of given a rejection off. If you zoom in a little more, you could see there's relative equal lows here now, right? So that may end up being a target. And if we stay below the fair value gap and some of the levels I just mentioned up here, then obviously, if that stuff shows itself to you, you're able to observe things and have a trust when you go down to the lower time frames, even if price does some sloppiness. There's a rule that I learned a while back, like when I was first learning ICT concepts, where if the lower time frame is confusing and it's not making sense and you're struggling to identify what the hell is happening, move up in time frame. And then if that time frame doesn't work, right, it's still foggy and you still can't find PD arrays to go off of and things to frame your range off of, move up in time frame again and keep doing that until you get to a chart that makes crystal clear sense. Because remember, the higher the time frame, the stronger the levels will be, and the stronger and more long-term the narrative will be, right? The lower time frame could be bullish, but if you go to the daily chart and it looks like it's bearish, that lower time frame is just showing you context of a retracement within that higher time frame narrative, right? So you don't want to not understand that. That's why the lower time frame can contest with the higher time frame at times, and it may not make sense at times on the lower time frame, but you move up and you're like, oh, okay, it's going down, right? But the 5 minute was looking like it wants to go higher. You're just in the context of a retracement, looking at more details on that within that higher time frame when you're on that lower time frame, right? I hope that made sense. Very important piece of information there. But yeah, so these are some of the levels that we want to see price stay below. Obviously, if it does choose to want to run back up here, it's not prepared to go lower yet. And then that would just basically instigate some potential strength in the indices for a short time until price decides to want to tank a little further, in which case we would then adjust, obviously, in the moment and continue to do this type of analysis and be flexible, right? But we have levels that justify us continuing to go lower, right? And then obviously if those are broken, because we have this organized process that is very repeatable and very much valid, which has been proven over the last year, and then for some, last couple of years, you're able to be flexible and trust it and not force something just because you feel like it's going to go in a direction and you want it to go, right? Things change at times. And identifying key levels like this, understanding what price or how price will use those levels, allows for flexibility. And as a trader, one of the greatest skill sets you can have is your ability to be flexible. Because at any given time, a bomb could drop. Something can change within the global geopolitical landscape that could change the narrative. And you don't want to be married to something that may change. You got to be able to be flexible, and having this process and understanding how the different PD arrays navigate from between each other and what validates or invalidates a particular idea. It's a superpower that you eventually have to grow into and be flexible with. It's not always black and white, right? Sometimes there's things that will mess up the different analysis, right? The different levels may get violated, and you have to be able to understand how to adjust to that and accept the fact that, okay, sometimes I'm going to have to scrap a particular narrative and be able to allow myself to be flexible and not use that as an opportunity to bash myself into thinking, oh, I don't know how to call the market. Oh, I was incorrect, right? Oh, I don't know how to trade. You don't ever want to think that way if you get something incorrect or if something changes. There's a process to adjusting that, again, it's like a superpower. And we showcase that a lot here in this community. But yeah, so again, if all these levels hold, we have no reason to justify price is going to do anything other than to drop. It may in the short term give a little rally. Obviously, that's just them trying to accumulate more buy-side liquidity to pair further smart money sells. Given what we see here, it looks pretty damn bearish to me, right? Bearish PD arrays are all being respected. Midpoints of wicks are being respected. Fair value gaps are being left in a very fast capacity. Price may want to run up here. As long as we stay below this, I'm going to remain bearish. But obviously, if it just accelerates aggressively through that, then again, going back to what I just mentioned, we will allow ourselves to be flexible. If it holds these levels and it just continues to drop, we just have a lot of confidence that it's going to start reaching for these lower levels. Okay? And obviously, that'll be very fun, because then that should cleanly translate to the indices. And then if the yields continue to do what I mentioned earlier, that'll cleanly push DXY higher, and then we could continue to seek higher DXY and lower indices. That's what we're going into the week to anticipate. We're keeping in mind power 3, so it could open at the start of the week and go totally against what we just mentioned. But again, Sunday, Monday, going into Tuesday generally operates within consolidation and manipulation inside the weekly range. And then, by Tuesday or Wednesday, hopefully, if everything's going to be a quick week, we should see some type of evidence promoting what we just discussed in terms of bullish DXY bearish indices. And then obviously bullish yields and bearish bonds. Okay, so we'll see if that all stays intact. Again, these are the levels to watch. We have a volume imbalance here, I forgot to mention. If you look at these levels here, these are new week opening gaps. I'll let you go in there and identify those. New week opening gaps are only valid for 60 days. You could identify some of the other ones from, as long as you want, to be honest. But the ones that are most relevant are the ones that are in our area right up in here, right? And for me, it's going to be these because we already have different levels over here to anticipate as well as resistance. So yeah, moving along, we'll go to the DXY now. You could see the DXY clearly, right? When you look at this chart, what is price potentially looking to attack? If this was the 1 minute chart, what reasonably can be the target? Well, we can reasonably see that we took out this high, ran out lows. This may be a shift in market structure. We have a beautiful fair value gap up here above relative equal highs here. So in my opinion, I believe that this is a highly likely scenario if the yields are going to do what I just mentioned and continue to respect the fact that it wants to go higher. All of that stuff that we discussed for the last 40 minutes, I hope you can see how taking that information, then going into the things like the DXY and the indices, you can see things start to make a little more sense and have more evidence behind whatever assumption you're trying to make in terms of direction, right? I hope that's something that is very telling, right? I hope it's very obvious that you can see that. The back-end information leads you to easier analysis processes when you go into these time frame or these assets that we actually engage on a daily basis. That being the DXY, that being the indices, and for some of you guys, the currencies, right? Which also have they're also impacted obviously by the bonds and yields in a similar way that we just mentioned, right? So yeah, I'm assuming, at least from this monthly chart, right, the price may want to continue maybe to run up and attack this. That's not unreasonable for them to want to get up there. Obviously, we have very obvious high here, relative equal highs, right next to a fair value gap. When you see something like that, like a very obvious high or a very obvious low, and then right next to it in very close proximity, you can see a PD array. Like in this case, it's a fair value gap. A lot of times that acts as a magnet, especially if price has volume pushing towards that direction, right? Or excitement, you could say, if you don't want to use volume, because volume really doesn't have any impact, like ICT says. It's all algorithmic, and liquidity driven, right? So I'm assuming that price is potentially going to get us up into there. We'll see if it wants to finish off the month doing that, or if we want to cap the month and then potentially start pulling back a little bit because we took this high. I wouldn't be surprised if it does want to get up here for price to open, drop a little bit for the week, pull back a little bit, set this high from the previous week, and then maybe run that previous week's high on its way to this monthly high on the way to this monthly fair value gap, right? Again, this is all justified. This directional narrative from this time frame, the weekly and the daily time frames, are justified by the bonds and yields information that we just discussed, similarly to all the previous weeks that we've done these types of calls. And many of you have seen it beautifully deliver, beautifully confirm particular ideas, and I hope you're getting towards the point where you can apply this stuff on your own, and you can just come here for entertainment value at some point, right? Or just just to hang out. So yeah, that's my assumption based on all the things that we've talked about. This is our levels on the monthly. We can argue that this volume imbalance dragged out may be impactful, so you can mark that off. I already have this written down on a notebook. This fair value gap here, right? You can drag that over to see if it's going to hold as a inversion fair value gap. Now again, similarly to the other asset we just looked at, if it was to violate this level, right, show zero respect to it, just start dumping off, right? Maybe this is just a large wick. Maybe it ends the rest of the month with a wick, right? Maybe it just took this high, breaks down below this fair value gap here, and just slides on through it, closing below it. That would tell me that we're going to end up looking to this low, possibly even this low, maybe even the rest of this fair value gap here, long term. I highly doubt that's going to take place. There's a lot of positive things going on with the U.S. economy, with the elections and whatnot. So we'll see, right? But again, for now, we are favoring this to continue to go higher based on all the stuff we've discussed. And this is my line in the sand for price to continue to go higher. If it was to break that, I would then make adjustments, right? But again, unless that takes place, nothing changes if nothing changes. So we are going to continue to try to press price to this fair value gap, press price to this high here. Now we got relative equal highs, if you notice that. So that is a very obvious equal high. So those are very accurate targeting or accurate targets for us to identify, especially coupling all the things that we've discussed today and have been discussing for the last couple of months at this point, right? So yeah, with that being said, we will now go to the weekly time frame. Right, so again, we've already taken out this high. Probably keep that there just for reference. Then we can also now mark this off as a target, a more near-term target before we get up to our initial overall target, which is this higher time frame monthly fair value gap I mentioned right above the equal highs here, right? So I hope all this stuff is making sense. I hope it's not sounding complicated. I try to make it as easy as possible, as applicable as possible. I'm not a complicated human being. I like things very simple, plain. Complex ideas don't need to be overly complex, although there are still some complexities that have to be adjusted to over time. But yeah, I hope in layman's terms all this stuff has made sense so far. If it has made sense, definitely make sure you like the video and subscribe. Share with your friends if you think they can get value from this. It's greatly appreciated. But yeah, so from that monthly time frame down to this weekly time frame, I still have the same perspective. Again, opening the next weekly candle, which is what's going to happen today, I wouldn't be surprised, given power 3 dynamics, if they open, want to drop a little bit, maybe even come all the way back to this fair value gap that I mentioned, and then go, higher again. If that does take place, then obviously we would see the indices also follow suit with that, and also do a little, small pullback as well, because power 3 is on every asset. And this one just happens to be reverse correlated for the most part to the indices and foreign currencies. So yeah, if this was to drop lower to start the week, then the indices would run higher to start the week. And then if they want to drop, they'll drop probably towards more towards Wednesday next to the red folders. And then this would probably give a continued rally towards the red folders on either Wednesday or Thursday, depending on what they decide to do. But that's not unreasonable. And another question you may be asking, if something like that takes place, is it applicable for me to want to trade counter trend if I do want to trade the early part of the week and we do start seeing evidence that it does want to do that? I mean, yeah, you can do that if you're comfortable with it, right? And when you counter trend trade, you cut your risk by half and you have one attempt. You don't push multiple attempts, especially if you know or have a good inclination with data backing up the fact that price is going to go higher, right? If you're going to sell and you're counter trend trading, you're counter trend trading. So you want to make sure that you lower your risk. normal risk size, whatever that is for you, should only be pushed in the higher time frame direction. Anything other than that should be very limited, because you're going against the grain, and at any given moment they can punch price against you, and then you'll feel like an idiot, and then you spiral out of control like majority of people do, with this false sense of like failure, but it could just be totally avoided by just having very strict rules and reasoning with yourself, and understanding the different conditions that you prefer to trade in. Some people will thrive in counter trend environments more than they thrive through trending environments. It's more common than people like to believe. But maybe eventually you'll be able to do both. I do teach counter trend trading. I made a video recently about that type of perspective and how you can form a model behind that. I have that in my archive of videos here. Can't remember exactly where it's at, but it's there. Type in counter trend trading. But yeah, so that's my assumption. Obviously, considerations of Power 3. Again, our bias is bullish. These are my targets. Keep it short and simple. So yeah, I hope that makes sense. Again, line in the sand is down here, this fair value gap. If it breaks through this, we have this fair value gap on the weekly, this fair value gap on the weekly, which are highlighted here, and then we have this fair value gap I mentioned as well. It's on the monthly chart. If that violates, you now have 1, 2, 3 fair value gaps that should hold price to go higher that have been now violated, and it may cause an issue, and it won't be as bullish as we assumed. Right, but if that stays intact, we will get up into here fairly quickly. All right, so there's your validation, invalidation, and targets and overall analysis for bonds, yields, DXY, and some other different considerations with Power 3. Now we will move on to the 3 indices. Okay, so just like we looked at on the other assets, start from this monthly time frame, we can see how price has just been beautifully making all-time highs, right? If DXY is to go higher, this may end up turning into a retracement, right? Or, if things continue to be exaggerated to the downside and DXY continues to exaggerate to the buy side, we may see a pretty deep retracement, right? Or it may shift entirely, right? We won't know until time passes, obviously, and different things take place on this higher time frame. But for the most part, price is still bullish here, at least on this monthly time frame. You could see the response from this order block. It did wick below it, but it came right back above it and closed above it, right? So use this monthly order block, which I mentioned in my private community. I mentioned a lot of these levels. But then we also came right back down into the order block, bounced higher. Same with this, right? Came back down, ran up above it, retraced one last time, really aggressively. Notice the wick, like we talked about earlier, the midpoint of that wick was respected, so bullishness continued. The midpoint of this wick was respected here, so bullishness continued. Midpoint of this wick was respected as price continued going higher, right? Printed this candle, couldn't even get to the 25%. So that pushed price and continued to keep it running higher, especially off the heels of the election, right? You look at this, large wick here, large wick here. Price retraced back into it, didn't even get to the midpoint, rallied up aggressively, respecting the midpoint of the wick, justifying further buy-side delivery. Same with this. Price dropped lower, wick, couldn't even make it to the 25%, let alone the 50%. And you could see how price has continued to make all-time highs, right? So that's a signature along with the other PD array relationships, like I mentioned earlier, that can help you identify and begin to trust in the moment the overall institutional order flow. It's one of those little key signatures that is very reliable and something that you definitely want to pay attention to if you haven't already. As you march forward, because it's highly, highly helpful and consistent. Okay, so honestly, it's very disgusting here for the NASDAQ at least. On this higher time frame, we do see that we took a high here, so we want to see what it's going to do from there. But yeah, as far as the monthly time frame is concerned, I mean, we got this monthly order block here. Maybe you want to mark off this area here, mark off the high here, calculate this wick, right? Go from high to low, get that midpoint. All those levels from this portion to the midpoint all the way up to this high may act as dynamic support levels if it is going to go higher. I'm assuming obviously that if the DXY is going to go higher and the yields are going to go higher and the bonds are going to continue to push lower, this should start to tip over at some point, at least in a short-term, near-term capacity. It may not be super obvious from this time frame. There's not really as much information we can go off of besides the wick, the order block here, and all those levels I just mentioned. But yeah, with that being said, we can move down to the weekly, see if we can get even a little bit further clarity and see if there's other levels we can look to navigate off of. We do see this order block here. We kind of want to see where is it at? So we do have this candle here, then we also have this candle here, but I'd probably want to use this level right there. So again, we want to see what price is going to do inside this range. We have taken the highs, we have the downside areas here. If we could stay above this and stay above the midpoint of this candle, I think we'll still be in business to go higher. But we're at a point where we're at all-time highs. So, I mean, it can continue going higher or it can turn around and try to start retracing on people. And of course, it's the end of the year. So I'm assuming that based on all the stuff that we looked at earlier, that we may see some type of sell-off, at least to try to come down, maybe take out these lows. Look how obvious that is. I mean, that's beautiful, ripe for the picking right there. That's 1, 2, 3, 4 equal lows that are literally frothy liquidity pools. We have trend line liquidity here. This is the weekly chart, but if we go down to the lower time frames, these are all weekly lows. So these are all lined up, left intact. I wouldn't be surprised if they look to purge that, especially since they took out the highs here, and maybe look to turn back into the range that we currently created. From this low down here, I mean, you could use this low because it's the most recent, but you take from this low to that high, equilibrium may look to be targeted, and maybe it pulls back into that and spends a little bit of time inside this range as we close out the rest of the year, especially the end of this month, right? So we'll see what happens in terms of that. We have here, let me take this off real quick. So when the new candle forms, we now have another level to identify the different levels, right? Break this down to quadrants, the wick, same with this wick, same with this wick. And if price is to go higher, if it continues to go higher, it'll look for those levels before it breaks through the high up here. So that creates near-term targets for you to navigate, as price continues to print. But again, if everything's going to continue with what we have seen in the bonds and yields, and then what we see in the DXY, again, we may see this look to turn. We've already purged out liquidity, so there's buyers that are trapped in there right now. So if they are to retrace, even if it comes down to equilibrium, then decides to run, we have pretty decent context that price can be navigated back towards the equilibrium point based on this higher time frame, obviously. And then we have the order block here, right? It's kind of inside these, right? I don't like this large wick, so I mean, I'm probably going to use this, not this. This high may be important. But yeah, I'll try to see what the response will be from here. I think I used it. Yeah, use this here. And then of course we got these equal lows here. I'm really interested in seeing the S&P take those out. That's way too clean. So, and again, that'd be justified by all the things we talked about, with the yields going higher, bonds going lower, DXY going higher, reaching for this monthly fair value gap. And then so seeing that translate after we took buy side, right, seeing the indices pull back to take out something like this internal range liquidity, a bunch of relative equal lows, it just makes sense. And that's a logical, very hopefully it's not overly complex way of looking at what we see in the chart here. And then obviously mixing in the intermarket relationships and the different things to help us further trust that, right? So if you go from this low to that high, equilibrium somewhere in here. But then again, if you want to use this low because it's the most recent fractal low, to this high up here, you can also mark off that equilibrium too. But regardless, all of that brings us to an end where price is looking to potentially pull back a little bit more. Again, we have equal lows here too, if you look at that. So that may be a target. We have trend line liquidity here. Like if you take this time frame, go to the lower time frame, that's all trend line liquidity that's been layered. We took buy side. Bonds look like they want to go lower. Yields look like they want to go higher. DXY looks like it has a very obvious target up here. And so again, that just the targets down here are justified, in my opinion. And of course, if that is disrespected, like I mentioned earlier, we have to allow for some flexibility, and we will cross that bridge when we get there. But going into this week, just to recap, okay, I want to see the yields potentially continue to go higher. I wouldn't be surprised if the start of the week goes against that, but then eventually kicks back in line with that. Like if the start of the week drops to then go higher for the yields, and then the bonds maybe open, go higher a little bit to go lower. Hopefully that also result in this opening, possibly dropping lower, staying above these levels I mentioned here to go higher. And then hopefully all that will translate to us seeing this turn into something that may want to attack the lows I mentioned from that higher time frame weekly chart here, these equal lows, these relative equal lows, to then potentially take those out. And then whatever it does down there, we'll have to see. I do notice something here, right? We do have this SMT that clearly was used to push price up above these highs, right? So the SMT, isn't that ironic how this SMT here formed right as the presidential election took place? Isn't that interesting? It's very, very interesting to see how predictive the market can be at times for real world events. Right at the the election that was at SMT, higher time frame SMT, and then price exploded, characteristic of, in this case, bullish SMT. But yeah, so yeah, prices came off the highs here, taken out buy side. We do have this fair value gap. We can make the argument that this could potentially act as a bullish breaker, right? But again, I'd want to see other things justify that in terms of like the bonds. I'd like to see those go higher if this is to be trusted. And then I'd like to see the yields go lower if this is to be trusted, if we do get a response from there. Yeah, this is definitely something to keep tabs on. We got this weekly order block here, possible breaker here. So yeah, we'll keep that in mind. Do we have SMT at the highs here? No, so there's no SMT at the highs, but again, we did take out the buy side here. So I'm definitely going to monitor this fair value gap. I'm going to monitor how price wants to behave around these new week opening gaps that are in this consolidated area here. And if price starts to show willingness to continue to go lower, and then the other assets from the start of the call operate within the context of what we discussed, that being the yields going higher, bonds pressing lower, resulting in DXY going higher, all of that stuff, if it remains intact, will favor the sell side I mentioned a second ago being attacked here. And this breaker should be violated if that's the case. This fair value gap and order block here should be violated, should show little respect to that. And then again, if that's the case and everything remains in that same context, again, we will see this sell side liquidity pool down here get attacked. Because again, we're in heavy greed, so it's not unreasonable for them to want to try to do that. But I'm not going to commit to something like that just yet, just because I think it's going to do that. I may wait to see further evidence as price prints down through this range to then try to, capitalize on a potential shift in sentiment. It would not be unreasonable if you just take this into perspective. They ran price up so aggressively, creating historical all-time highs after the presidential election. Imagine how many people are thinking, buy, 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 buy. It's never going to go down. Just buy, 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 buy. Not knowing all the things that we discussed this morning that are showing evidence that it may attack the sell side down here. Just imagine how many buyers are trapped inside this buy-side delivery. People thinking that this is going to be maybe a bull flag, right? This is a beautiful scenario where a false bull flag could take place. So again, we're going into this week keeping that in mind, but we're not going to force anything, okay? We're not going to force anything, but we're going to keep all this stuff that we discussed in our mind. Ideally, I would like to see it get down here because I would like to see them do what they normally do and punish people who are greedy, and if that's the case and everything stays intact from the analysis from earlier, we will have a pretty confident time getting down below these lows, and we will be prepared for it. On the contrary, if price was to break above this fair value gap here, we now have a target up here as well, previous week's high, right? And then obviously I'd like to see the yields go lower in that case, bonds go higher in that case, resulting in bearish DXY, right? But we're going to go into this week assuming we're looking for identifiers. The price is maybe going to reach down below here given all the other context and the other assets providing evidence that that will probably be the case. Things have not shifted yet from bullish to bearish, but we see other identifiers with other assets showing that that may be the case walking forward into the coming week or weeks. All right, so I know that was probably a lot of information, potentially. I hope it was understandable in terms of the application of these different concepts and the overall process. I hope those of you that have been here for a while see the repetitive nature in what it is we do here in terms of process. Last week and the Sunday prior to this one, those of you that watched that, you see that we were on point. We knew exactly what was going to take place, while many people were probably lost and confused. So yeah, there's a method to all this. There's a way to tame this beast, and a lot of that has to do with your preparation. And like ICT says, you will spend, or you should spend, more time on that higher time frame, deciphering how to identify the narrative on those time frames versus the time you spend on the lower time frame. More time should be spent in preparation on the higher time frame versus wasting time stuck on those lower time frame charts 24 hours a day. Because if you master the higher time frame, you're able to master the lower time frame. All right? So yeah, you guys, with that being said, I appreciate you guys hopping on. If you guys have any questions as you walk forward this week, definitely let me know in the comments. If you haven't already, definitely like the video. Share this with your friends. It really helps the channel out, and I appreciate the support. And yeah, with that being said, you guys, I will talk to y'all probably sometime this week, maybe on Tuesday. And we could do a little check-in to see, where things are. All right? So God bless you guys. Have a good weekend, and I will catch y'all on the next one.